Good afternoon, and thank you for joining me in this webinar from HESTA in conjunction with Life Without Barriers. Today we're talking about money planning top tips, and my name is Ralph Lomu. I'm a Member Education Manager at HESTA, and today we're just sharing a couple of ideas, given it's been a very tough year this year. So I suppose we're just keen to sort of help you make more of your money right now and sort of making your dollar last longer. So here we are sort of just sharing some top tips that may help you during this time that could be convenient and useful for you. So let's jump straight into it and let's get things underway. So first things first, I do have to warn you, any information I do share today is general information. If you feel that some of the information might be a little bit more useful for you to make a more informed decision around your personal situation, feel free to reach out either to myself or to our team in relation to that. I'll share my details later on in the presentation, just in relation to getting in touch with us. But if you have any questions along the way, I do encourage you to type it into the Q&A chat box, otherwise into the chat room, and I'm happy to sort of answer that along the way. Okay, where do we start? So essentially, there's really three different areas that I'm going to cover off today. Firstly, we'll sort of touch on the income side of things, and we'll sort of talk a little bit about the expenses and sort of how we can sort of help around some ideas around income and expenses. And then we'll sort of talk about super and what we can do around our super during this time, but also maybe if you haven't had a look at your superannuation account in a while, there's a couple of things that you could probably think about today in relation to sort of your money planning and how you can sort of design your household finances. So when we sort of talk about income, it's always important to understand how much you're bringing in. And I suppose, you know, for a lot of people, they may sort of have a budget already. A really good budget that we sort of tend to recommend is the Money Smart Budget Planner. And the reason why we like that one in particular, it's got nothing really sort of any association with HESTA, but it is an independent sort of financial tool that we sort of feel that it could be quite helpful in relation to helping our members maybe understand their household budget a little bit better. But what you can do is you can break it down into your income. So really understanding what sort of income you're bringing in as a household, and then breaking down all the expenses around that down to utilities, insurances, groceries and all the sorts. So it's a little bit more detailed than say your normal budget, but you know, most people might use a spreadsheet, but whatever you sort of use, look, it's not saying that you have to use a particular budget, but it's a good start to know that you do have some sort of blueprint or sort of tool that you're sort of using to sort of manage the income and outgoings within your household. There are some pretty good apps out there, which I've just popped on the screen. Money Brilliant, Good Budget. These are quite useful apps that you could use as well to help you sort of budget. I understand that some of the banking apps as well, or logins, they will also allow you to sort of dial into, break down what your incomings and outgoings are and categorize those different income and expenses for you. So they sort of do most of the heavy lifting for you. So feel free to use the banks in conjunction with some of these budgeting apps to sort of help you understand how you can sort of manage the budget or sort of tweak it a little bit if you need to. So once you've sort of done your budget and you sort of have an idea of whether there's an income gain or an income gap, because it just during this time, we know that sort of people have maybe sort of seen a reduction in hours, or they may have seen their roles, or you know, they may have sort of no longer working. So there may be a bit of a gap in the sort of household budget. And so therefore, you know, we sort of want to help people sort of understand some of the things you can do in relation to helping yourself sort of get yourself past that point till you find work again, or till you pick up some more hours. Look, in some cases, some people might see a bit of an income gain during these circumstances, depending on what industry they're working in. Some industries have sort of continued throughout this whole COVID situation. So if you find yourself in a situation where you do have a bit of an income gap, Reduced spending is probably the most obvious, but how you can do that, we'll sort of talk a few ideas around that in a moment. But if you've got sort of cash reserves, it's probably a good idea to think about maybe accessing some of those cash reserves as a first port of call. Looking around the home as well and looking at unwanted items that you may sort of want to sell. I know there's really good places such as Gumtree and Facebook Marketplace, which don't cost you anything, but might be an idea to sort of offload some of those unwanted items, just to sort of help you maybe fund whatever it is that the household needs in the way of income. Look, we sort of recommend that it's probably not a good idea to sort of fund the income gap with credit card debt. Look, I think it's fairly obvious to most people that we prefer that you don't sort of use a line of credit as a way of sort of financing your means. Look, it's only because of the fact that it is quite expensive way to sort of borrow money. Look, if you are going to sort of look at line of credit, then probably accessing the redraw in your mortgage, which is a lot cheaper in the way of interest rate, would probably be the best way to go. And obviously, there are certain parameters where you can access your super if you're sort of going through a tough time at the moment. And we'll sort of talk about a couple of things later on in the presentation as to how super can sort of help you in relation to your current circumstances. So there are a couple of things that you can sort of do immediately, and these are sort of things you can probably do today. Look, mortgage and rent, we know that the banks are sort of coming to the party a little bit in relation to sort of maybe negotiating rates or negotiating even sort of payment holidays in relation to making repayments. So we understand that the banks are sort of playing a part in sort of helping out for those that may have sort of seen a reduction in their income or may have seen their work cease altogether. Similarly with landlords, they've also been quite accommodating from what I understand in relation to negotiating around rental pauses if they need to, or even sort of rental reductions if there's some sort of negotiation that's allowed in there too. So look, they are tough times at the moment. I know for a lot of people it's really tough calling the bank or calling the landlord and asking for negotiating something that they believe probably might be a tough decision or a tough conversation. But look, we're all in this together, and I guess it's only going to benefit yourself and your families if you have that conversation. Some of the things that you can also think about doing as well is looking at maybe renegotiating some of your contracts around some of the key utility bills around home. So if we sort of talk about energy providers, if you haven't sort of renewed your contract in a couple of years, you'll probably find that you're probably on a quite an expensive contract in the sense of rates if you're talking about electricity and gas. So it's probably a good idea to check in with your provider just to see whether you're on the best plan they currently offer. If it's been some time since you've sort of renewed that contract, it's probably a good time to negotiate. And look, moving providers is quite an easy thing when it comes to energy providers. So have a look at the electricity and gas bills and maybe just sort of see if there's any room or wiggle room there just to sort of free up a couple of funds in relation to what some of the expenses might be. When we sort of talk about bills, I know a lot of providers, whether they're phone, electricity, gas providers, they give you the ability to sort of maybe pay on an ongoing basis without having to wait till the bill arrives. So they call this bill smoothing. So what it means is you can actually nominate to make these payments on a regular basis. So that you can sort of control your expenses a little bit rather than having to sort of put the money aside and waiting for that bill to come. And look, I know with some of these providers, they also give you a discount if you are paying it up early. So if you sort of have a fair idea of what the bills might look like, break that down into for each payment cycle to see how much you need to put into those bills. At least that way they are paid when you receive your payment, when you receive your pay or salary. And that's a good way of sort of not only taking advantage of any discounts that might come with it, but also allows you to sort of budget it a little bit easier and then not have to wait sort of that bill shock when the bills do arrive every quarter. The other thing as well is credit cards and personal loans. Look, if you're really doing it tough, I think not only is it worthwhile speaking to the finance provider to see if there's a way of negotiating a better deal there, but I think at this point, it's probably best for those that are sort of struggling with that to make the minimum payments. So you'll notice on a statement, it'll offer what the minimum payment is. So for the meantime, it's probably best just to keep it to the minimum payment until sort of things change or improve for you. And even if you have to sort of negotiate a bit of a pause on the repayments, then it's something you probably want to speak to the finance provider as well. Insurances, look, whether they're home, motor vehicle, any type of insurances, look, it's probably, if you're sort of similarly with the utilities, if you've sort of gone over or outside the contract period that you initially signed for, look, insurance providers are quite easy to switch around. So it might be even worth just doing a comparison. I know there's a couple of tools online that are quite useful in the sense of doing a bit of a comparison between different providers just to make sure that you are on the right deal. So worthwhile sort of looking into that and understanding that. Then also groceries. So maybe even looking at you know, your weekly grocery bill and sort of do a little bit of meal planning. I know it's not for everybody, but it is worthwhile just maybe sort of planning a few meals. At least then you know what you're shopping for and you're limiting the amount of excess groceries that you're paying for, and then obviously not having to sort of throw out any sort of items when you get to the end of the week. So as I mentioned, there are a couple of sort of, we've covered off the income piece and we've covered off the expenses and sort of some of the things you consider there. Then we sort of talk about the superannuation side of things, and there's a couple of effects that we've noticed with super that sort of happened over this COVID situation. One of those is obviously market volatility, you know, and sort of understanding that a little bit more. We'll talk about that. There's also options there for early release of super, depending on your situation, and also recent announcements by the government to sort of reduce the income stream payments. So those that are sort of at retirement phase drawing on their super, they have to meet a minimum percentage of super that needs to be paid out each year. And the government's actually halved that, so they don't have to take as much, just so they can retain a little bit more in their capital. Now, we have interactive online webinars that sort of we run on these particular topics each month. So please look out on our website for that if you feel that's something that you could benefit from. Market volatility. So look, it's been a really tough year in the way of markets. I guess it's really key to understand when you're looking at your investment profile or your investment strategy for your particular portfolio is understanding the difference between defensive and growth investments. Now, when we sort of talk about defensive investments, they are sort of a lower returns over a long period of time, but you won't see as much volatility and fluctuations in the short term. They tend to be a little bit more stable. So you won't sort of be susceptible to market conditions that and changes in the share market. So things such as cash and fixed interest will sort of probably fit into the defensive investments world. Then you sort of look at growth investments, and they include things such as property and shares. And unlike the defensive investments, they can sort of be susceptible to sort of short-term volatility and fluctuations as we experienced this year. But over the long term, what you're sort of expecting is a potential for a higher return over the long term. So we'll show you what this sort of looks like in the way of recent sort of returns in our investment options. Now, if we sort of went to the bottom of the global financial crisis back in February 2009, and you held $50,000 in your super, now if you look at the bottom line there, the amber line, cash and term deposits would have returned 33% over that time from the bottom peak in February 2009 to now. But then sort of when you increase the risk a little bit in the way of a conservative option, you can see how bumpy the road is along there, but trajectory-wise, it's sort of increasing over the long term. Similarly, with the balanced growth, you would have doubled your money in a conservative if you had $50,000 then, but in the balanced growth, you probably would have times it by 1.5 times. So look, there is potential for higher returns, as you can see with the level of risk that you take with the higher risk investments or the growth investments, but you have to understand that you need to be prepared to sort of take the bumps along the road with that, as you can see by the way the graphs illustrated. Just quickly checking to make sure there's no questions. Now, when we're sort of talking about the emotion cycle that some people would go through in relation to how markets perform, this is probably just a quick snapshot just to sort of help you understand what people may sort of feel, especially highlighted during this year when sort of during the start of this year, there was a lot of optimism around where the markets were going and things were going quite well. A little bit of excitement around there, but then sort of when things started to turn with the announcement of a global pandemic, a little bit of anxiety and fear started to set in. And then, for some people, they went straight to the panic stage, not knowing where things were going to go. A lot of uncertainty around that. But then in April, May and June, things quickly recovered, for a lot of people in their investments. So this is just sort of really just to illustrate how sort of different emotions sort of went by and how different people may have handled the situation. For those that sort of maybe held the course a little bit, they benefit from the fact that maybe inaction could have been a bit of a saving grace. But I guess when you sort of look at the previous slide where over the long term, they may have sort of understood that they have to accept certain market movements, but over the long term, they're expecting that sort of growth trajectory over that longer period. Early release. So there's been a couple of things that the government have introduced in the way of temporary early access to super, given the current situation. For those that are eligible for early access to super, which is tax-free and has no effect on Centrelink, basically what it means is the government have allowed those that sort of have been affected in financial hardship or sort of may have lost their jobs or reduced salary or reduced hours, they have the ability to access up to $10,000 from 1 July, which now has been extended to December, of up to $10,000 as a one-off lump sum. So to apply for that, just need to sort of check with the ATO. So the application process is handled by the ATO. Essentially, they have sort of managed the process, and then once it's approved by the ATO, then they will come back to us and let us know that has been approved. You can go through the MyGov access if you've got a profile through MyGov, or you can contact the ATO directly and apply over the phone. So once it's approved on their front, they'll let us know, and then after we'll process that payment with two to 5 business days. So that's one thing that the government's doing. They've also introduced the government assistance package, not only for individuals that might not be employed at the moment, but they've also expanded the eligibility for Centrelink requirements. There were sort of 2 payments, $750 as an economic support payments. They've supported employers in relation to keeping some of their staff and introducing the JobKeeper payment. So there was a couple of things that the government's introduced. So it's important to sort of think about these options rather than sort of accessing your super. One of the things I would be mindful of is, that I would sort of remind you to be mindful of is, there's, in the instance where there's sort of a lot of money being floated around, we're sort of talking about theft identity and things like that. So we've heard a couple of stories around that. So just beware of any scams that might be going around at the moment, and make sure you're talking to the right entity, and it's a legitimate website or a legitimate contact, whether they've emailed you or contacted you by phone. So it's just a matter of being a little bit diligent. Income stream reduction, as I mentioned, it probably is going to be relevant to everybody here today on the call, but it is for those that are sort of drawing income from their super. As I mentioned, the government's just to reduce the minimum payment that they have to take per annum, just so that they can allow them to have their super last them longer. What should I do if you're not retiring anytime soon? We just want to sort of remind members that we have absolute faith in our experienced investment team, and that is a long-term investment for super. So we do have faith that our team take that into consideration when they're looking at how your investments are constructed. Yes, there is a bit of short-term volatility, but I guess the key thing is making sure that you have a little bit of conviction around the strategy that you decide, and making sure that you are ready to go when the sort of markets do recover and there is an eventual rebound. For those of you who are nearing retirement or already accessing your super, might be a good idea to book in a time with one of our superannuation advisors. It's not going to cost you anything at all. Our superannuation advisors come at no extra cost to our members. but there may be a bit of a delay because they have sort of been inundated with a lot of requests for access to their advice. There's some of the statistics around, why you would sort of call on support. I think the 2 or 3 things that I sort of like to point out here is 60% of our members are worried about running out of money in retirement, which is a pretty high number. So there's more than half our members are worried about running out of money in retirement. But then the 73% don't know how much money they'll have in retirement. So they're not too sure what their current balance might look like in however many years when they decide to maybe call it quits. So it's always a good idea to sort of touch base and maybe speak to one of our advisors. Like I said, it doesn't cost you anything at all if you want any help around your HESTA account. But it's a good idea just to sort of understand, where you sort of might end up, and then you can sort of do a little bit of planning around that and sort of get a bit of a picture around your head what you'll do when you sort of reach that stage of life. Look, for those that do take up advice, in most cases, they'll end up $100,000 better off in their superannuation account. So it is worth your while sort of to take up the advice. Like I said, it's free. So, it's just a matter of giving us a little bit of your time to have one of our superannuation advisors have a good chat with you over the phone about your current situation and do a bit of a review and check in on everything else that's in your account. Now, I thought I'd just post up my details there for those of you interested in maybe accessing some advice. They can come to me directly just to have a quick chat to see if it's something that, you think it might be worthwhile, or if you have any other questions at all without having to go through the advice process. So please feel free to take my email address and my phone number, and I'll be happy to help anybody that sort of just want to have a quick discussion initially, and then I can forward you onto the right area if you need further assistance beyond that. The other thing is we've also got some pretty cool tools and calculators on our website, which are really helpful in understanding some of the worries that we sort of mentioned earlier around, how much will I need in super, how much will I need in retirement, how much will I have in retirement, going on the current sort of path that you're sort of traveling on, things like that, understanding your investment profile a little bit better, or what your risk tolerance might look like. So feel free to access those tools and calculators through our resources page. There's plenty of ability to sort of access that. But look, I think that brings me to the end of our presentation. So I'll just quickly check to see if there's any questions at this point. No, there's no questions. But just while you're thinking of any questions there, I just thought I'd mention a few things that might be worthwhile sort of thinking about. So look, if superannuation is something that you need some help with, I would say, look, log into your member online if you're a HESTA member, have a look at your most recent statement, make sure you understand everything. If there are any questions around that, please feel free to reach out to us. We're more than happy to sort of answer any questions around your superannuation statement that you might not understand. Some people might want to contribute a little bit extra into their super, so there's some really good benefits around that. Look, just understanding their investment strategy and looking at maybe their insurances. So if you're looking for just a no obligation sort of chat, feel free to get in touch with me. If you want to speak to one of our advisors, like I said, it's quite beneficial in that sense. But just wanted to thank everybody for joining me today. I want to thank you, Life Without Barriers, for giving me this opportunity to speak with you today. But I hope I was able to leave you with at least one thing today that you could sort of take away from this presentation. But thank you once again for listening to me. I appreciate you taking the time out of your busy days, and just want to sort of wish everybody well. And thank you so much for your time. Take care.